Hi, everyone. This is Jason Briack of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today, Mo Dawood and I are joined by a returning guest. He's one of our favorite analysts. He's one of the one of the first people who actually got me interested in gold and silver when I found him on the internet in 2007, 2008, and that is David Morgan of the Silver Investor and the Morgan Report. So thank you for coming back on, David.
My pleasure. Thank you.
David, I want to start off the podcast by talking about what's going on beyond the U.S. border, especially what's going on in the Russia-Ukraine conflict. Recently, Russia threatened to dump the U.S. Treasury bond if the U.S. imposed sanctions on Russia. With that, I think it has major implications because Russia holds over $200 billion in Treasury holdings. And we all know that the market's not going to want to buy all that Treasury because, let's face it, it's not in high demand. So do you think Janet Yellen will reverse the taper and increase the monthly QE program in order to prevent a spike in the interest rate if that ever happens?
Yes, qualified with what you said. If it were to occur, she'd have to, because the Fed has become the buyer of last resort, as we all know, and if there was a flood of Treasuries on the market, there wouldn't be many buyers, so the Fed would have to step in and buy it up. And to do that, they'd, of course, I don't know if they'd tell anybody. I mean, it'd be obvious to the marketplace. I don't know if they'd give it a name or not, but essentially that's what it would be. Yes, they'd increase QE substantially to absorb all of that selling.
Now, David, in the macroeconomic situation, we've just had a whole bunch of weird things going on the last couple of years. Things have not played out the way many gold and silver bugs have expected. Many free market economists like yourself and myself, who initially expected, hyperinflation in earlier years. Why do you think that's the case?
Well, first of all, for the record, I've been one that has stated again and again, I don't expect hyperinflation. I gave a speech in Vancouver several years ago and outlined that. What I did say is I expected to see a currency crisis. But a currency crisis doesn't necessarily mean it hyperinflates, although you could build a case that happens most of the time, Zimbabwe being the most recent example. The currency crisis is when the currency is shunned, and it's really not so much the everyday people, although that can take place. It's more the big macro picture where China says, we don't want to buy so many of your bonds. And Russia says, we have your bonds and we don't really want to buy any more, and we might dump some. And that's what we're facing right now. So that's shunning the currency, but it doesn't necessarily mean a hyperinflation. The reason being is that a massive sale in the bonds drives interest rates up. And as interest rates go up, bond values go down. So it's kind of a self-governing mechanism that's in place in the bond market that has a massive sale, takes interest rates higher, but it also depreciates the value of the bonds. So it's somewhat deflationary. It doesn't mean that you don't have a currency crisis. It does mean you have a currency crisis. It's just, can the market absorb the selling or not? And that's what we talked about at the beginning of the program. So in my view, you could have the dollar continuing to decline, and hopefully it happens at a rate that, that we can deal with it. But it could take place in a manner that gets out of control, and that's what none of us want, but that could take place. And if that were to take place, the dollar declines rapidly, there's no savior, so to speak, then there'd probably be another Bretton Woods type of a situation with like a G20 meeting, and they might, absolve the debt and come up with a new currency that's a global currency, or who knows what could go on. There's lots of different scenarios. The point being is that I'm not necessarily in the hyperinflationary camp, but I am in a currency destruction camp.
Okay, that's an interesting distinction there, David. And in terms of what's actually happening now, I think you can tell me what you think of these views, but from all the evidence I've pieced together, I think the entire world is in different degrees of stagflation right now, a very weird type of stagflation. So not exactly the 70s stagflation. So we have the developing world, the China, Russia, Brazil, the BRIC countries, India. They have enormous, inflation on their imports because their currencies are just getting destroyed against the dollar. They've been doing currency wars, to manage their currencies and to boost exports and things like this. And they've gotten the majority of the inflation that the developed world, like the U.S. and Japan, have created through their quantitative easing programs, because Japan's QE program is even larger on a relative basis than the U.S. But yet we also have inflation because, here in the U.S., because you're friends with Alan Butler, right? And he does this show. He has Keith Hall on the BLS, and he just did a radio show a week ago. And what they said, according to the BLS figures, the producer price index rose 0.6% last month. So on an annualized basis, that's 7.2% inflation on an annualized basis. And then what did the BLS do? They changed the formula again a whole bunch of times and downwardly revised the formula and the inflation number on the PPI down to 0.2% for the month, which is only 2.4% annualized inflation. So you have, this crazy dichotomy here where you have, the formula is just being changed from what would have been 7.2% inflation down to 2.4. It's just craziness.
Yeah, well, I compliment you, Jason, for your insights, and I agree. I mean, I think that's, I love the truth, and the idea is correct. There is stagflation everywhere, and the way I would say, and maybe add on, and I think you did an excellent job, and there's not much more to add, but basically everything that you need is costing more. I mean, the fact of, the food supply and what's going on with the weather systems and on, basically food costs are increasing. Most of your, medical care, obviously, which is a real touchy subject, and I don't want to go down the Obamacare trail on this interview, please. But the things that we need cost more. And the things that are debt-based, like the housing market or, let's say, automobiles or anything that's usually done with a large loan, those things are still decreasing in value. And what's interesting, just from the housing market, I'm not a big real estate student. I'm not a big person that knows a lot about it. But, having bought a few homes in my life and rental property and that kind of things, I know a little about it. And here's the deal. There are places here in my local hometown where you could actually buy property for less than the new construction cost would be, and they're not selling. Why is that? Because there's still an oversupply, that's why. So things can go from overvalued to undervalued, and right now I'd say they're like fair valued, but I think the housing market on a net basis, not certain little areas here and there, there's little, vacation properties or whatever, there's little niche markets, you always have those. But the macro picture is, I think real estate's got to go down further. The automobile industry is really hurting. They're saying it's getting better, but they're doing with the automobiles what they basically did with the housing market a few years ago. If you have can breathe air and put an X on a bottom line, they'll give you a loan, and they'll stretch this loan out 7, 8, 9 years now. So this is absurd. So again, probably added on too much, but the point is, yes, it's stagflation. It's not just inflation. It's not just deflation. You have certain areas of the economy that are just buffaloed. I mean, this idea that they just have to change the metrics on how they calculate the Bureau of Labor Statistics on the producers index just drives me nuts. And it's just, what I call the Ministry of Truth. It's straight out of 1984. I mean, the Ministry of Truth is the Ministry of Non-Truth. They're going to adjust things, and they're going to try to propagandize everyone that can believe their crap, that things are fine, and they're not. They're getting worse almost always. And I hate to be a doomer, but I am a realist. And the real facts are most people are having a lot of difficulty now, finding work if they need it or supporting their family if they've been out of work for a while.
And also, we're also experiencing a shrinkflation where food portions are shrinking, but yet selling at the same price. We're seeing that at restaurants and at food packages as well. So a lot of the inflation out there is hidden, and people don't even notice it. And if you combine that with higher minimum wages that's coming in the future, Maryland just passed a state law, and now minimum wage is going to be above $10. Look like, I think Seattle is trying to increase minimum wage to $15. So stagflation is here to stay.
It is, and the minimum wage thing, I mean, there's lots of arguments. I think the Austrians do a great job. You can look up something on Mises.org and type in the search engine minimum wage and read a lot about it. But I have to comment, when I was a degreed engineer out of college, I worked for $6 an hour. That was my starting wage. So, if they set a minimum wage, I mean, what is the correct minimum wage to set? What people don't understand about this minimum wage stuff, and I will go on a bit about it, is that what is the proper wage? Because what's right on 2014 won't be right in 2017 or 2020, and why is that? because there's this insidious inflation going on all the time. So it's not about getting the right minimum wage. It's about correcting the monetary system. That's what needs to be corrected. But liberals don't get that. They get this idea that, go ahead.
David, I think it comes down, well, the liberals, the politicians, they want a certain agenda. So they want wages and prices higher. They want higher government tax revenues. And the Keynesians and the other progressives, they're willing to do whatever it takes, with monetary policy, fiscal policy, get it done through lobbying or unions at whatever state level or municipal level in order to, further the agenda. So these are blind ideologues who want all wages and all prices moved higher because they believe that that is what's good for, the majority of people in central planning.
Couldn't have said it better. What's the next question?
So I want to, before we get into the gold and silver market, I want to ask you about the general stock market. A lot of people out there are predicting a significant market correction this year due to the weak job numbers, a sputtering growth in the economy, and also the taper that happened in this past year in 2013. Do you buy that, or do you think the stock market will continue to go up nominally?
I'm in the former camp. I believe that by any metric that you use, the stock market is overvalued. I think it is ready for a significant pullback. And of course, timing is always very difficult in these things. But one of the better metrics to look at is what the insiders are doing. And a lot of insiders have exited the market or reduced their positions significantly. So basically, it's a very similar pattern to what we see in all markets, which is accumulation, markup, and distribution. The insiders accumulate when the price is low. It moves up under the public, and then they distribute it, meaning they keep the prices high and they keep offering their positions to the public before the next downturn. So that's a classic situation. That's what I see going on right now. Again, the timing is difficult. The only thing that would reverse my opinion is like a massive amount of QE where people are panic buying anything to get out of the dollar. But we're not there yet, and I'm not exactly sure we're going to get there. There's arguments made by others that, this excess money printing is all going to go in the stock market. I think we've seen a lot of that already. I think it's time for to see it go the other way.
Yeah, this artificially cheap debt, David, is also allowing for humongous misallocations of capital from the private sector. Because if you're a CFO running a very large company, you're either going to buy back stock because your debt's so cheap, you're just going to buy it back to rejigger earnings higher because your revenue's not growing, or you're going to do a leverage buyout and grow that way. And we're just seeing enormous amounts of leverage buyouts now the last couple weeks. They're just larger and larger, many billion-dollar deals that I don't think we would have seen in a free market. But since interest rates are so cheap, the CEOs with companies who have assets and cash flow are just gobbling up smaller companies because the debt's so cheap.
Yeah, well said. And then the stock buyback, like I say, the only reason a company buys back their own stock is they don't have any place else to invest it that makes more sense. And so, people think it's a great thing, and for the stockholders, it may be a good thing. I'm not trying to make a moral judgment on it. What I'm trying to convey is that this is something that makes you pause, because what it says is what we've been talking about. The economy isn't all this robust, and there's happier days ahead. If there were, that company that's buying back its stock would say, no, we're creating this new business opportunity over here, or we're going to move into this other situation. In other words, there would be free capital movement to an area that the market needed, and it would provide more jobs, more income, and all these good things that we think about in the free market. But that's not what's happening. It's like there's no place to go with this money, so the best thing we can do is buy back our own company stock. That means there's stagnation.
And then also we've seen analysts and companies manipulate their earnings so that they can at least beat their earnings, which causes the higher stock prices, which doesn't really reflect the economy and how it's performing overall.
You're right, Mo, and welcome to Enron. It's just the whole system really is so corrupt in so many ways, and not that there's no human being that's 100% moral or whatever. That's impossible. But within the parameters of the lifetime that I have lived. I mean, things have gotten so corrupt versus what they were, at least in my strong studied opinion. You wouldn't see these kind of failures that you see from like the big three accounting firms that you now see, or you wouldn't see a downgrade of the U.S. bond market, have the the Attorney General of the United States sue the company for telling the truth. I mean, these kind of things that are now taking place are just beyond my comprehension, yet we see them more and more all the time.
Now, transitioning, David, to your main expertise of gold and silver, let's talk about the demand side of silver. In 2013, according to Coos Janssen, India imported over 6,000 tons of silver in 2013, a humongous increase if you look at a chart for comparison for physical silver imports compared to past years. Do you think that's a one-off event, or do you think that's more of a permanent long-term trend?
That's a tough one. I think it could be a one-off event. I mean, since India's been doing this thing with taxing gold and trying to discourage their citizenry from doing what they've known for centuries, and that is that any fiat currency is going to have failure. Any government-backed sponsored currency or script is going to have a problem. So they know that, and they've been buying gold more than silver over the last decade or so. If you go in earlier than a decade or so, India primarily bought silver. That was a means of preserving wealth. It's just it's come up so significantly in the last 10 years, along with China, that they've actually, in a lot of cases, preferred buying gold. So I think it could be one of two things. One, they're either going to continue to increase their gold purchases basis if they reduce the taxation level, or you might just see silver go along with it, which it always has, but maybe in a more significant way. So I really don't know the right answer. No one does. But I would guess that you probably aren't going to see a big spurt like we saw. That was due to this tax situation. But you will see it continue to be used as a preservation of wealth in that country.
With the high demand, we also saw tight supply in 2013, mainly because a lot of the miners had to shut down their mine due to higher input costs and low gold and silver prices. And with that, we saw countries like China import almost more than the annual mining supply, and yet we didn't see a spike in gold that many people predicted, and the same for the silver market as well. Why do you think we haven't seen a spike yet?
That's a great question. I think the reason is that a lot of these paper markets are used by the powers that be to continue to maintain a certain price level while the physical market is doing something else. In other words, let's say that you had a lot of over-the-counter derivatives at a certain price point, and you knew in advance that those were actually going to be cashed in for physical. You could do that in the over-the-counter market. No one would see it in the actual futures market, and you would be able to basically drain the gold supply from west to east, which has been happening for years, without moving the markets too much. The point of that is that there's only so much physical. So even if that were able to be maintained for a while, it wouldn't be able to be maintained forever. And that's the argument I get all the time is, well, if they can manipulate the price, then why should I get in the market? Because if it can be manipulated, there's no point. Well, the point is that every manipulation in the history of mankind has always come to an end because the free market is greater than mankind's forces, no matter how smart these people think they are.
And supply demand is reality too, right, David? So if the miners can't make a profit and demand for physical metal is increasing, right, and there's zero incentive for, First Majestic Silver or another silver miner because they're not making money at $18 an ounce silver, they're going to cut back their capex. They're going to close unprofitable mines. They're going to wait till the silver price goes $25, $30 again before they even think about opening a new mine. So this is eventually, they can, like you said, change things for a certain number of years, but eventually, supply and demand are going to call the price into account, and they're going to want some type of balance at some point because, it's just not going to make any sense for the miners to continue to produce, $18 an ounce silver when they're not making any money and demand's going nuts because I don't know if you heard this, but I heard Keith Neumeyer say on an interview in the last couple months that there was an actual large industrial plant in China that used silver for electronics, and they couldn't source silver, physical silver, for at least a couple weeks. And he was just upset that didn't cause, the price to go higher. So this is just unbelievable when you're hearing, yourself and credible analysts like yourself and Keith Neumeyer and other people talk about the supply demand in the market and the prices and doing, what we expected it would.
Yeah, well said. I'll just add on to it. I mean, I've read enough and I continue to study, but if you read the last chapter of any of these situations, the free market wins, and that's what you're saying. I mean, you get to the point where these artificial prices are going to curtail production, and sooner or later someone's going to have it. And the problem with silver, or the good thing about silver, depending on your perspective, meaning if you're an investor, you're long, or if you're short the market, is that once you have a physical need, let's say in the industrial sector, the investors are going to glom onto that. So you're going to have two demands at the same time. You're going to have industrial and investment demand. Or it could go the other way. You could have the investment demand pick up substantially, and that causes the industry to come in. But both of those forces could take place in a synergistic way. And that synergy is something that a lot of other commodities don't enjoy. So I'm still very bullish on the silver market, and it is frustrating to see these prices where they are when we know that the basic primary silver producers all-in costs are somewhere around $22 to $25 an ounce. And if that's their all-in true cost, if you get 25, you're not going to be in business for very long. You're basically going to just break even. And no one goes into business to break even. So you got to be looking at like 30, 35 for a lot of primary silver producers. And one thing I like to add on here is that, about 35 to 40% of the silver market comes from lead zinc mining. And there's a lot of zinc mines that are going to be closing down in the next couple of years. And what that means is there's going to be a lot less silver production coming out of those zinc mines. We did a study, as both you know, because you both get the Morgan report, but we did a study on zinc. And zinc is actually one of the base metals we actually like going from here on out. And it's funny that some of the more established Wall Street type firms are now coming on the zinc story. And we were one of the first, in fact, if not the first. I hate to brag, but I think if you check the data, we were probably the first to come out with that zinc study.
Yeah, I was going to ask you about zinc and ask you if you think retail investors out there on Main Street should look into investing in zinc, because I think that's probably the only base metal that people should invest in right now compared to other metals such as copper and iron ore, mainly because of the upcoming supply deficit that's happening in zinc.
Well, I think it's a conservative investment. I mean, the base metals don't have the zest that the precious metals do, but I think it's a more conservative investment. The one that we put on the list when we did the zinc study has been kind of a steady eddy. It hasn't, blazed forward, but it's made some nice steady gains, and I think it's going to continue to make some steady gains over the next couple of years at least.
Now, David, in terms of the silver demand side, we talked about investment demand a little bit, quite a bit. Let's talk about industrial demand. The last 18 months, it seems like we've had a resurgence in silver. You had the Solyndras and all these other solar firms go bankrupt. You had the Chinese panel manufacturers drastically lower the cost of panels, put almost everyone else in the United States and Europe out of business. I think we had many dozens of solar firms, and I think it's down to a handful now outside of China. Even Chinese ones filed for bankruptcy protection. And now you have cheap interest rates. You have Elon Musk, who has Solar City, who's taken, these cheap panels and cheap interest rates, and he's doing these lease deals to put solar panels on a lot of people's houses in California for a limited amount of money. It's only a couple $100 a month, and then, it turns back your electricity bill. Do you think that's going to be one of the main, maybe the main industrial demand driver for silver going forward? Because, you look at coal-fired power plants, and these things are polluted. They're very expensive, high capex. They're dangerous. We've seen the water pollution in West Virginia. And now you have solar, which is about evenly economic, and isn't silver one of the main uses in the solar panels?
Yes, it is. And if you go back to 2000, I did a study on silver over the next decade. And a lot of the study used a lot of input, but primary input was what Jessica Cross had done. And her study on solar showed solar going from a very low figure of about 30 million ounces a year to a high of 140 million ounces a year on an annual basis for solar. And we were actually on her projected curve for 2001, 2, 3, and part of 4, 2010, 11, 12, and 13, part of 2013. And then it basically declined or actually stagnated. It stagnated around 70 million ounces a year. So to get to 140 million ounces that was projected for 2015, I don't think I said that, we are not on that projection anymore. However, as you said, Jason, we are seeing a resurgence in solar. India is starting to come to the solar industry in a bigger way. I don't think we're going to get to the 140 million ounces on an annual basis. I think we probably will get to about 100 million ounces on an annual basis. But the problem with Germany being a leader earlier is that a lot of this stuff was government subsidized because solar is not that efficient. They're making strides in it. It's getting more efficient, but solar energy is not as efficient as burning gasoline, coal, or oil. And it costs more. So it comes back to the energy required or needed input for an output. In other words, how much energy does it cost to make a solar panel, and when are you going to get a payback and that type of thing. So, again, as you said, this Musk guy who's, fabulous with the Tesla, and he's got a lot of great ideas, but he's basically taking advantage of low interest rates. So, again, are we misallocating capital here or are we not? I think that's a real question. Not that I'm anti-solar, but it isn't the most efficient. If it could get its efficiency where it's equal to or better than these other situations, and obviously you'd have a huge boom in solar, but that's not the truth.
And also, the price to install the solar panels and the price of the solar panels itself has fallen since 2011. So that make it a little more attractive to a lot of people in Main Street to maybe add a couple solar panels on the roof. And we're also seeing IKEA and Home Depot starting to sell solar panels. So even though we don't think that solar panels will completely replace gas and oil, it could become a little bit bigger player in the near future.
I agree. I want to be clear. I think that you're going to see resurgence. I think you're going to see it increase demand. I think it's going to be somewhat of a fad. I think if, you're semi-well-off American, and, it's going to be cool to have a couple solar panels or to heat your pool with it or your spa or your hot water heater or whatever. I agree with that, but the point is that I want to emphasize is it isn't the most efficient way to do it. And again, I would love to see some technological breakthrough, you might say, in the solar industry where these things are super efficient and they are competitive with what we already have. Because if that were the case, then you would see a huge demand for solar, and then we would find something very interesting. There's not enough silver in the world to solar power the world. I mean, some of these people that haven't really looked at the facts think it'd be great for everybody to go solar. Well, there's not enough silver on the planet to do that.
Well, hopefully with free market and capitalism, maybe one day solar panel will become more efficient energy-wise. So one last question I have for you is talking about the gold and silver mining industry in general. Are you surprised that there hasn't been many acquisition and mergers within the past year after the big drop? I know we've seen Silver Standard, they bought a mine from Barrick, and Goldcorp, they're trying to buy out Osisko. We'll see what happens there. Do you think this is a sign of things to come, that acquisition and mergers are going to start to pick up?
Absolutely. Usually these bigger companies are pretty conservative. They want to see that the bottom is in before they start their M&As. And I think we're pretty assured that the bottom is in now. And so now is the time. I mean, it's cheap. There's good assets that can be bought for, pennies on the dollar or at a discount to what you'd have to pay a few years back anyhow. And there's companies that have assets that are desperate for cash or need to be taken over. So I think they've done it correctly, really. I mean, I like to purchase after I know a bottom's in. I don't always get it right, but that's a good way to maintain a good structure corporately.
Okay, great. Well, David, before I let you go, I hear that you are updating your book, The Skinny on Silver. Why don't you tell our listeners what the update's gonna have and when it's gonna come out?
Great. Well, I can't promise either one. The update will be a substantially improved book. Not that I'm embarrassed about Get the Skinny on Silver investing, but the publisher had certain requirements, like no graphs, could only be 100 pages long, had to be geared for like an 8th grader, that type of thing. Well, we're going to self-publish this one, so we may even have a different title. and it will have a lot more data. It'll be more of the book I envisioned when I wrote the first one. When I got the idea to write a book on silver, my idea was write pretty much the Bible on silver. I wanted to cover the history of silver. I wanted to cover the supply-demand fundamentals. I wanted to cover new technology. I wanted to cover, air pollution, water, all the green assets that silver has. In other words, the solar panel. There's a lot of green energy. There's a lot of green things like purifying water, as I just said. So I wanted to go into basically every aspect of silver, even the futures and options markets, the manipulation story. I mean, all of these things. So that's what we're shooting for. So when is it going to be finished? Well, a book like that, you can carry on forever and never publish it. But we're going to be shooting for probably about a 6-month time frame. Obviously, we're going to have to, do a little bit of editing, a little bit of thinking, because a lot of stuff I could get carried away because it's something I really care about and have devoted a lot of my life to. But we'll have a substantially better book, and we're shooting for like a 250-page book. So it'll be, something that wouldn't be so huge that the average person wouldn't want to pick it up. Anyone that was interested in the gold or silver market at a cursory level would want to read it.
Great. When we look forward to that book. And also, if people want to subscribe to the Morgan Report, where can they go?
The best thing to do is just go to themorganreport.com. Once you're on the website, there's 3 levels of membership service. You can go over to the right-hand pull-down menu, and you can visit the 3 levels of service and determine which is best for you.
Okay, great, David. Well, thank you for coming on for a podcast, and hopefully you can come back on again.
Well, my pleasure. Thank you, guys.